let's jump into stocks. Tell us exactly what it is that we have to get excited about right now about the stock.
Yeah, so the more and the more I think about it, it's easy. It's so easy, and I've been caught in this mentality before, where I find it very difficult to buy stuff when it's high, buy stuff when it's really, really hot. The stock market, real estate, whatever it might be. I'm in the process of my wife and I are in the process of building a home. I know Chris is doing that and is moving into his new home, and I'm like, oh man, did we just buy at the high? The more I think about it, the more I'm just a long-term bull on real estate. I think we're going to slow down, but I'm just a long-term bull overall on real estate. And one of the most dominant companies within the real estate business, beyond like a home builder or anything like that, or a mortgage lender, is Zillow. Zillow provides a lot of, they're actually becoming, they own a lot of assets with the houses that they're purchasing. But they're also a very big lead generator for realtors and all that. So Zillow Group is a stock that I like. The fundamentals are really strong, Gary. So when we're trading stocks, what we want to do is we want to combine really nice technicals with fundamentals. And sometimes at long term, the fundamentals are more important than the technicals long term. Technicals are great to get in at a good price, but fundamentally speaking, this is a really strong stock. We're talking about a forecasted projected annual revenue growth rate of like 70% for the next 5 years. That's what they're forecasting, which basically means this company could be earning $8 to $10 per share in 5 years. And if it grows like that, it should demand like a 25 or 30 times multiple. This could be a $300, $400 stock in 5 years. And so I really like the level right now. I'm not saying it's going to get up there. I think it was overdone at 200. I think it was even overdone at 150, even 100. Right now, I like it. It's been beat up. It's getting beat up today because they came out and said, hey, they're going to slow down on their purchasing of their homes. I don't necessarily think that that's a bad thing. They got earnings coming up, and when is their earnings? On the 8th. Well, anywhere from the 4th to the 8th of November. So what I want to do is I want to play, we took this trade in equities on demand. I want to look for opportunities to buy it. I like the level right now. I'd actually be willing to buy right here. But what we try to do in equities on demand is we always try to figure out, like, how can we own something lower? How can we make money? If I just buy the stock right now and if it goes down, I lose money, right? So how can I make money up, down, or sideways? And so what we did, Gary, is we actually structured a position. We used options. I went out to November 12th, and just a brief overview. I'm not going to go into a ton of details on the trade, but I sold the $80 put, the November 12th $80 put. At the same time, I did what's called a bear call spread by the 80 by 81 bear call spread. And so it's a fairly conservative play. What I did is I brought in $3.66 of credit. So I'm like the insurance guy, right? So I get paid right away. Just like you have to pay your insurance bill right away. Even if your house doesn't, burn down, you still pay your insurance. So I collect that money right away. And here's the way it works. If the price is above $80, or let's say $81 by expiration, then my trade makes $2.66. So I'm making like almost 3.5% if the price doesn't fall. The price could even fall from current levels, fall 13% from current levels, Gary, and I still make money. So, and what's nice about this is if the stock does fall 13%, I want to own it. That's a level that I actually really, really want to own. So I'll own the stock at $76.34. So in my case, from my viewpoint, this is a win-win scenario, right? So I either own it exactly where I want to own it, which is right around that $76 level, or I make money if it doesn't get down there. So we try to make money up, down, and sideways. Zillow is a great stock to be able to do that right now. And it's got a catalyst coming up, earnings. And so that helps us make even more money with the options. So I know Chris liked the trade too. And this is one, I think, Chris, did you end up getting filled in it? I know you were looking to do it a little bit different.
Yeah, I did a little bit different for just a slightly lower ownership level and played it a bit more conservatively. I didn't get filled on it this morning, but I still have it good till canceled. So I'm going to keep an eye on that one for, really this week. I mean, we had this one, my expiration was out to the 12th. So we're taking in that earnings window and going out to the 12th of November. So hopefully, we had a pretty aggressive push down today. It was down like 10% at the lows. Yep. And if we come down and retest those lows, I feel like I should be able to get filled at that level where I'm looking for like $5.50 of credit. And my ownership level would be like below $70. So yeah, I'm looking at like as low as possible on Zillow. But As we broke it down this morning in class, it is a great setup. I love it. It's a great trade. Also, Tyson, I was looking into some grocery store chains afterwards, looking at like Kroger and Albertsons. Same thing. Like, they're cheaper. It's not a real estate play, but just like right now, it's like, I know we have something going on discretionary. We had this play. It was a pairs trade. We did like, what was it? We did discretionary. We were doing some bear call spreads on discretionaries, and then doing long bull put spreads on what was it? Basic materials, staples.
Yep.
So that's, I was looking at grocery stores like Albertsons is one, Kroger's another one. Costco, I was just looking at Kroger. Costco's at like crazy high, still like $400 and some, $450. But Albertsons has 20 different brands, and Kroger has a bunch of different brands. And look, I mean, even though grocery stores aren't high margin, it's high volume, and ultimately, like, they're going to pass on whatever cost to the consumer, and people are still going to have to eat. People are still going to go to the grocery store. So they're healthy. They're healthy financially. They offer decent dividends, 2% or better, and they're actually at a decent price. Like we've the last probably month or two, actually this month especially, we started to position our equities on demand trading room around these long-term plays, and we're really taking advantage of these near-term options and companies that we really like. I mean, you're doing an awesome example right now, showing traders with like $10,000. We have, what's our total, Tyson? With like a $10,000 account, we have roughly 10 stocks, right? Like,
yeah, actually we're
stocks?
about 13 right now.
Okay, yeah,
which is pretty awesome. And if everything closes the way it should, the returns on those 13. Like right now, we just managed a trade in MARA and SoFi, SOFI, where it's a guaranteed win now. Whether it keeps going up or down, we've locked in a guaranteed win. And a lot of these, Citi, we could do the same thing in Citigroup. We've been in that for 2 weeks. AT&T is the only one out of the 13 that's slightly down. But the nice thing is, even if it's down, we have plans on over time managing our way out of the trade. And so, what we're doing is we're using like an example, $10,000. We're taking all these live example, like $10,000 worth of margin. And I'm really trying to be really strict around that and make sure that I don't, because it's easy for me. I've got more money in my account. It's easy for me to be like, oh, I'll just add more and I'll add more. But I want to make sure that the students can really, like, hey, if you have $10,000, you can actually do this. And we're doing really well. The strategy's performing. It's not one of those strategies that's going to turn a $10,000 account into $50,000 in the next year. It is one of those strategies that will turn 10,000. That could turn 10,000 into 14,000, and then 14,000 into 19,000. It's a slow. That's not even slow growth. That's great growth, but it's not like some of the big massive moves we can get. It's a little less speculative, but it's still a nice way to generate. Heck, if I can make 40%, make an extra $400 a month on something like this and just compound it, that's pretty good.
Absolutely. Yep. So never a dull moment, Gary.
Yeah.
No, it isn't. No, it isn't. And by the way, traders, for those that are watching right now that haven't been inside Chris and Tyson's trading rooms, nor have they been inside the stocks and options trading rooms, you definitely want to go ahead and get connected. Contact your account rep. Find out how you can get into their trading rooms when they talk about these trading opportunities. And if you don't understand what they're talking about, specifically what Tyson said, because sometimes it sounds like gibberish, like, hey, you're buying a call put here, and I'm looking for to trade lower and own it, and own the stock, or even go ahead and pay insurance on the stock, or whatever it is. If you want to know all of that gibberish and make sense of it, that it actually becomes an opportunity for you.
Earnings Jade Lizard Cyclone strategy, just let me know.
There you go.
Stop. Too much information. Yeah, but if you want to know all about that stuff, get into the trading rooms. Tyson and Chris are teaching some great stuff about trading opportunities in the stocks field. So make sure you guys get involved in that. All right, guys. Well, thanks for joining us again. It's been a great session again, Tyson and Chris. We always have a great time talking about these different market opportunities. Hopefully, you guys enjoyed the session. Once again, subscribe to the channel, smash the like button. And we'll see everyone back again the same time, same place next week as we go ahead and talk about great opportunities heading out for that following week. So let's go ahead and talk about that next week. But enjoy this week. Have a great week. We'll see you next time. Thank you.